We shared with investors last year our power of three, which were going to be our growth drivers: innovative product, creating omni-guest experiences, and market expansion. And in those, driving doubling men's, doubling digital, and quadrupling our international business. And the opportunity to market, to innovate in and around our community was always part of that strategy. We do events today. We have our experiential stores. And what we've seen and know is that more and more guests are sweating both physical and digital at home. And we were always excited and interested in this space as an opportunity to build out that connection. As you know, we've been testing our membership program for over a year now, which has been incredibly successful. So we already know that our guests have shown a willingness to work with us in other means and other relationships, sweating locally in studios and coming together for events. And Mirror creates a platform for us to continue through those initiatives, building out our membership program and offering those solutions in-house.
What's happened, Calvin, to Mirror's business as economies have shut down and people have had to work out at home? And do you wonder at all or worry at all whether that's peaking now as economies reopen?
Yeah, what's exciting about Mirror, we took a small investment in them last year, which really gave us the opportunity to start the relationship. Earlier this year, we put some of our ambassadors on the platform to see how the Mirror guests will interact with a variety of sweat options. We love the versatility of the platform. There are multiple ways in which you can sweat on Mirror. What we equally like about it is the business was started in 2016 by Brynn as the founder. It only launched in 2018. And this year it's going to do in excess of $100 million. It's on a wonderful growth trajectory. It will be profitable next year. They built an incredible base business to bring these sweat solutions to the guests in a very effective way. It's just a young brand that lacks awareness. And what we're really excited about this partnership is that's what Lululemon can bring to the brand, to the partnership, bringing it to our millions of guests and driving that awareness and building upon the momentum that they've already created in the business and truly just getting started.
And just one more for me on the financials. Obviously, $500 million, you've got plenty of liquidity, which you spell out. But there are some troubling signs on the horizon right now as cases rise in the south of this country. We could see more reopening halted or rolled back with stores closed. Why now? Why are you not nervous to take that extra $500 million off your balance sheet at this time? Yeah,
I mean, as you've mentioned, we have $1.5 billion in liquidity built upon $800 million in cash. We had a $400 million revolver. We've added another $300 million credit facility. We're going to purchase in cash. And quarter one, we were one of few, if not the only, that even in challenging times, we were still profitable. We shared direction on our last earnings call of how we're seeing quarter two, the momentum into the business, both with our digital and opening up stores on an international scale. So we're very confident with the momentum we have in the business, the demand we have behind the product, the growth that we're seeing, as well as liquidity to be able to weather a variety of scenarios moving forward. And we always said we were going to enter into this thing. One, we were going to protect our people. Two, we were going to continue to manage in both the recovery and the support phase. And we're going to continue to invest in the business. And this investment is in the future of our vision of Lululemon. And we're super excited of how it adds to our ecosystem and contributes to the momentum.
So Calvin, just by listening to what you're saying, am I right in saying, I mean, I know it's about both, but am I right in saying that this acquisition is much more about now using Lululemon to help raise awareness of Mirror such that $500 million purchase price for Mirror product itself will prove to be very cheap, as opposed to a new avenue to sell Lulu products through?
What we like about this business model in Mirror is that in itself, it is a revenue business that's proven to be very successful, with incredible momentum after just 2 years, and we know we can continue to grow that. It's only available in the U.S. today. We can bring it on a global scale. We can tie it into our membership. We know the revenue behind that recurring revenue stream. So we see an entirely new model of incremental business for Lululemon. And in doing that, strengthen our community, build our community, drive our loyalty, which will drive our core apparel product as well. So it really is going to be, sort of a linked ecosystem, but it's not an acquisition simply to sell more apparel. We think that would be a byproduct, but we love the model and we love how it plays into our vision.